Hey fellow stock guardians, it's Monday, April 19th, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from a red stock market. Today's episode is a quick review of the stock market indices movements, followed by the introduction of a rarely discussed stock that you may want to add to your watch list. The market indices finished the first day of the week in the red, especially the Nasdaq index that finished Monday almost 1% lower than where it started. There wasn't any significant economic report rather than the market taking a breather from its record high last week. One thing I noticed in the market commentary that grabbed my attention is how the media is considering the stock market to be on a new bull market cycle. Before pandemic, we were on a decade-long bull market and most analysts were wondering and warning how the market was primed for a correction. Of course, the COVID-19 pandemic changed everything and we went into a rapid cycle of falling and recovery much faster than expected. The swift and consistent intervention of the Fed and the government's support with the stimulus package also changed the context. It feels we are swimming in the new territory. It's hard to use the historical trend to gauge where we are in the market cycle. It is surprising that the media is now considering 2020 as a new bull market and trying to use historical data to figure out what would happen after the first year of a bull market. That's something we all need to pay attention to because it seems the market sentiment towards market cycle has drastically changed due to the pandemic. Searching for hidden gem stocks, I looked for companies with strong sales growth and a lot of cash on their balance sheet. I came across a company called Pool Corp, ticker POOL. This company, as its name suggests, helps homeowners install and maintain their swimming pools. With the stay-at-home orders during 2020, the company had experienced a rapid 20% plus growth rate in its revenue, while according to Pool's leadership, the COVID-19 spike is unexpected and most likely won't be sustainable. This is a company expected to grow consistently by 6 to 8% over the long term. Interestingly, more than half of the company's revenue comes from pool supplies and maintenance. So the spike in demand during the COVID-19 pandemic means a guaranteed recurring revenue in the years to come. Going back to the company's stock card, it has solid operations. Growing revenue, profitable operations, and a strong balance sheet are indicators you would always want to see from the companies you would like to invest in. My strategy here with this rarely talked about stock is to monitor it. The chances are 2021 won't be as exciting as 2020 as the management confirmed, and we most likely get a chance to pick up shares of this well-managed, profitable company at a better price. It's almost like we need a new strategy for our 2021 watch list to find companies that had an excellent 2020 and wait for the slowdown of their growth in 2021, and market would certainly overreact to the slowdown of the growth in 2021 compared to 2020, and that would give us a chance to buy shares of well-managed companies with a strong balance sheet and performance just at a better price due to market overreaction. So Pool.com goes to my watch list for an opportunity to pick up some shares at a better price. As usual, I'd like to invite you to give StockCard a try, research as many stocks as you want, and receive stock pick ideas from successful investors. To do so, you'd need to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. And please like and subscribe and share these daily market recap reports with your fellow investors. I'll see you tomorrow.